All right, now I've gotten these formulas written out for you here. Right, you see prime cost, conversion costs. Definitely memorize this. Super important to know. Well, we've got a bunch of terms. We've got direct costs. These are expense that you allocate specifically to an object or activity. So direct cost encompasses direct materials and direct labor, meaning, okay, let's say that there's an employee who just sweeps the floors. That could be an hourly employee, but that's not allocated specifically to an object or activity, right? That employee is just generally sweeping the floors. So that would be indirect labor or manufacturing overhead. Probably not even manufacturing overhead. It might just be, just general overhead, right? So you see the difference here already. You may have, right, different types of overhead manufacturing directly tied to our manufacturing. You could have general overhead, which is just the employee sweeping the floor. But if there's an employee that directly builds the product, is hammering away at the nails on the chair and building a chair, that would be direct labor. So allocated specifically to that object or activity. Similarly, let's say you're a very good plant manager and you buy a bunch of, say, you throw a pizza party for the employees and you buy a bunch of party supplies. Those are materials, but those aren't direct materials because that's not going into the costs of the building the chairs. So, right, that would be more overhead costs. Whereas if we've got wood, wood is a direct material. The employee hammering the nails to build the chair is direct labor. See the differences here, and I will definitely touch on indirect materials and indirect labor, indirect costs at another slide, right? So these direct materials are materials and supplies that are consumed during the manufacturing of a product and are directly identified with that product. Direct labor, wages that are incurred in order to produce goods or provide services to customers. Manufacturing overhead, this includes fixed, variable, or semi-variable expenses that are not directly involved with the company's product or service. These examples could include rent, admin costs, employee salaries, all of those. That's a good example of manufacturing overhead. And then memorize these. Definitely get a good memorization here. Cost of goods manufactured. Oh boy, this is a big one. And I took the liberty of building out a big old chart, which I'll show you after this. Cost of goods manufactured is direct materials, direct and indirect labor, and overhead. See this and understand it. Well, here it is. Our cost of goods manufactured formula may seem big and intense, but no worries. It's actually here to really simplify everything for you. And I'm going to show this again later in the lesson. It's important now. I'll make sure that we see it at different stages. Well, we have cost of goods manufactured. Now, cost of goods manufactured is, again, it's a big formula. We'll see this throughout. It's a item will be asked about, will be given, and need to find other costs. And here's where we get into a lot of algebra. We have so much algebra on this exam. It's such a good throwback to those math days, right? Because you could be given your prime costs, let's say, of 5, and maybe they give you cost of goods manufactured of 10, and then so equals, and then plus. We got to find x, right? X is manufacturing overhead. Do a little algebra. Make sure you're familiar with the algebraic process. Now here, cost of goods manufactured equals all of these. It's just broken out in different ways. Well, prime costs are, as we mentioned, direct materials and direct and indirect labor. As you can see, I specify not indirect materials. However, indirect labor is included. Definitely memorize these formulas. And then we have conversion costs. Well, conversion costs are composed of these two. The super logical chart here. The one that's broken out most in depth right here is DM, DL. I mean, I know it says indirect labor. I'm just so used to saying direct labor. And then overhead. These three constitute our cost of goods manufactured. And we will touch on it at some point in cost accounting in this lesson as well as next one. But product costs are the same as inventoriable costs. These are synonyms. Product costs are costs that get added to the asset that you make, such as chairs, right? And those are added to the balance sheet as assets. That's the process of capitalization. So let's say you've got inventory of $1,000 right now. inventory of $1,000 of chairs, and oh, you forgot an extra cost. Well, that cost was nails. It was the cost of nails, and those nails went into the chairs. You spent $10 on nails, and these would be product costs because they go into and enhance the value of the asset. So we would actually then turn on your balance sheet, talking a little financial accounting, the value of your chairs would now be $1,010. That would be an example of an inventoriable cost, whereas we have period costs, which is the opposite. It's expense that goes in the income statement, right? Let's say you just had simple maintenance repairs on a machine. Well, that's a period cost. It didn't enhance, right, any asset. We can get into the whole capitalizing versus expensing cost for a machine, but let's just say it's normal routine and maintenance for a machine, right? That would be then expense to go in the income statement. And you see here, all of these get added to the asset right here. They all get added to cost of goods manufactured. Now, lastly, what's the relationship of COG-M with COGS? See what I did there, COG-M? I say COGS, but I don't know if people say COG-M. They don't. I started it. Okay, cost of goods sold. And think about this logically. This is more algebra, and we will see the base formula in a second, if you haven't seen it with me yet. We've got beginning finished goods. Well, that makes sense. Whatever's sitting in the warehouse. Say you have 100 units of finished goods, and this can be in dollars or units. Well, I guess the cost of goods sold would be in dollars. Fine, you got me. We could use units though. So $100 sitting in the warehouse or in the storage. Well, plus whatever you made, cost of goods manufactured. So let's say we made 50 minus ending finished goods. So whatever's in the warehouse at the end of the period, the end of the month, say it's 25. And that's going to equal the cost of goods sold, whatever you sold, whatever you got rid of. So that's going to bring us to 125. You could rewrite this another way. And you know what the heck? I'm just going to go to our base formula, which is next. Right here. You could also say beginning balance. This is base formula, right? If anyone has not seen it yet, it's simple. Just makes sense, right? Makes sense. It's whatever you have as a beginning, you add, you subtract, that's your ending balance. And this is algebra here as well. So you have your beginning goods in the warehouse of 100. It's 100. And additions would be cost of goods manufactured, okay, which is given to us. Or it could be the other way. They could always, it could not give you maybe the ending or maybe not give you the beginning. And you could solve it if you have 3 of them because it's algebra. The cost of goods manufactured is 50. Cost of goods sold is a subtraction because this is, right, the beginning and ending are what's in the warehouse. So how do you increase what's in the warehouse? You make more. How do you decrease what's in the warehouse? You sell more. This is X because we don't know it. And they'll have to give us the ending balance, which I decided was 25. Practice your algebra. Algebra here, 100 plus 50. And then that is minus X equals 25. All right, you do a little math. And 150. 150, subtract that, bring that to this side. That gives you negative 125, so negative X equals negative 125. And for those of you who remember algebra, there is whenever you have X, you have an invisible 1. I mean, it's there, right? It's technically 1x. So you just multiply both sides by negative 1, gets rid of the negative, gets rid of the negative, answers X equals 125. There's algebra, there's the base formula. And base formula, you could use this for anything. Anything where there's a beginning and ending balance. Most simple example is your bank account, right? You have a beginning bank balance. Hopefully it's super high. I hope you have a lot of money in your account. Add would be deposits. Subtract would be withdrawals. Ending balance would be whatever's left. Cool. Awesome. Let's run through an example here. We've got micro company, and micro company is going to allow us to use the base formula. In this question, we are going to be using different formulas with the cost of goods sold, cost of goods manufactured, right? All of what we've seen so far, we're going to put it to use. So micro company provided the following information. Thank you, micro company. You're too generous. What are micro's conversion costs? Now, first step I do is I see the question and what are conversion costs? Write out the formula, and that is direct labor and overhead. Great. Uh-oh, I don't see labor and overhead. So we think, all right, I described the formulas many times as, like put ammunition in your utility belt. You got tools in your tool belt, you never know what you're going to need, and you want to memorize all the formulas so you can pull them out as needed. Okay, so we start thinking of other formulas that have conversion costs in them and labor and overhead. Well, we've got cost of goods manufactured, cost of goods sold, right? All of those. And as you see more questions, you'll start to see, right, the relationship between materials and the fact that we've finished goods and work in process, both beginning and ending. So here is where we have our relationship, right? If you have beginning and ending of something, it's significantly hinting at a base formula. So we've got two components here. We could really do either first, but we'll start with our cost of goods manufactured. So we know that COG-M is labor, materials, and overhead. So the big three, right? So we need all three of these. And we know that if we can find COG-M and we can find materials, then direct labor and overhead are together as conversion costs. So we don't even need to find just labor and then just overhead. We just need to find them together. All right, so let's find materials and let's find cost of goods manufactured. Well, cost of goods manufactured, we know based on the formulas we saw not too long ago that it's a base formula, right? So beginning finished goods plus cost of goods manufactured minus cost of goods sold equals ending finished goods. And just like with algebra, you can rewrite that in so many different ways. I rewrote it here for you, right? You can just move them around. Now, obviously, like you got to add and subtract from both sides, do the whole algebraic method. So we get to the most direct formula of COG-M equals COGS plus the change in our finished goods. As such, the change in our finished goods is 200, right? 1800 minus 1600. That gets us to 200. And then COGS is given right here. So cost of goods manufactured is 15,200. Now, conversion costs are right here, right? We've got our formula. So COG-M is 15,200, and we've got it down here. Now, what about materials? We also need materials because we've got this one down. We're trying to find this. We need this. And, well, we have beginning materials. We have ending materials. We have additions to materials because purchases are additions to the stockpiled materials you have. And materials used in cost of goods manufactured, that would be the subtraction. That's our base formula. And as such, right? So we do our beginning, addition, subtraction, ending, right? So beginning plus additions, we bring the endings to the other side, minus 800 gives us 7,400. 7,400, 15,200 gives us 7,800 for our conversion costs. And this is all algebra, and I am skipping over, right, the intricacies of bringing each number to each side where is needed, right? So be familiar with that. I'm not covering that because I'm under the assumption that you've seen this by now. If not, we've covered it, throughout the lessons, and practice algebra. Yeah, do it. But it's more just me weighing what it's worth it to go over, right, in the questions that we are seeing together. All right, moving on. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.